Bitcoin is decentralized, but the price, that's a different story. So who actually controls the Bitcoin price? The big misconception. Most people think Bitcoin's price moves because millions of regular people are buying and selling. That sounds logical, but it's not true. Retail investors, people like you and me, don't have enough money to move $1 trillion market. So, if it's not the crowd, then who is it? First, there are Bitcoin whales. These are individuals, funds, or companies holding thousands, sometimes hundreds of thousands of Bitcoin. When a whale buys or sells, the market reacts instantly. Not because Bitcoin is weak, but because liquidity is limited. One move from a whale can trigger fear or greed. Market makers and exchanges, but whales aren't the full story. Behind the scenes are market makers and exchanges. Their job is to provide liquidity, meaning they constantly buy and sell to keep trading smooth. They see order books, they see stop losses, they see liquidations. That information gives them a massive advantage. Why price moves feel manipulated? Have you ever noticed how Bitcoin hits your stop loss, then reverses? That's not bad luck. Large players hunt liquidity, areas where many traders placed the same bets. It's not personal, it's just how markets work. So who controls the Bitcoin price? Not one person, not one company, but the biggest players with the most capital and the most information. That's why emotional trading loses, and patience usually wins. If this changed how you see Bitcoin, hit like and follow BitBlastCoin for more crypto explained without hype.